Hi traders, and welcome to my video on the Doji candle breakout strategy. In this video I'm going to show you how you can capture moves such as this one for around 200 pips using a very basic strategy. This won't require much of your time. Okay, so what is a doji? First of all, a doji candlestick is a candle with a small body and long wicks. Okay, they signify indecision in the market. The important thing with the doji breakout strategy is where the dojis appear. Okay, you can see there's dojis marked here, here, and here. However, we're in a market range around this area, so we're not going to look to take any trading decisions. What we're first going to do is look for a trend. How do we do that? Well, we draw our support levels. So we have a support level there. Okay, we draw a resistance level, which is around here. Let me just redraw that. Draw a resistance level, okay, being tested 1, 2, 3 times. This is a nice W chart formation you have there, forming a W pattern. Usually expect to break out to the upside following on from that. So what we're going to do is this market's making lower highs as well. You can see lower high, higher low, higher low. So it's making higher lows. The market's going up. And we have our breakout here. Okay, so you could have traded that breakout. This is not the doji breakout. I'm just showing you ways that you could have entered this trend initially. If you're trading the doji breakout strategy, what we're going to do is we're going to wait for a pullback in a doji candle. Okay, so after the breakout of this consolidation period has happened, we're going to wait for a pullback to enter in on this trend. It's not quite a pullback here. You can see we've had a lot of bullish price action. So I'm going to ignore this doji and I'm going to wait for a few bearish candles, which we get there. Okay, and one of them is a doji. So the doji breakout, we're going to trade. We know the trend is up, so we're not going to trade a short. We're not going to sell below the breakout of the doji candle. We're going to buy when there's a breakout above the high of this doji candle. Okay, and that's our doji breakout strategy. First, identify the trend, look for the doji candlestick pattern, and then trade on a breakout in the direction of the trend. Simple as that. There's another doji here. Okay, same principle. We had a pullback, and we can trade the breakout of the doji candle to the upside. Okay, it's as simple as that. There's even another one up here. By now the trend is starting to look like it may have run its course. We don't want to end up buying too high. That being said, that is a solid doji breakout trade above the high of that doji. And you can see the significance of this strategy, that resistance actually becomes support. Okay, the high of that doji candle. So it can be a good way to enter into trends. Is one of the thousands of different ways you can enter into trends, whether you're using technical indicators, price action analysis, candlestick patterns. The most important thing is finding a trend, timing the entry, and good money management. So talking of money management, if we entered on this doji breakout here, we could have placed our stop loss below the low of the doji. So it would have been around 10 pips, which is a really tight stop loss, especially considering this is the 1 hour chart time frame. This is a euro pound 1 hour chart. There's a 10 pip stop loss and potential of 130 odd pips profit there. You can use a trailing stop. So as price is moving up, we have a pullback and it continues. We can place our stop loss below the pullback, which will be there, and just maximize the move as much as possible. You can also close part of the position on the way up if you wish. Last thing you want to do is leave your stop loss here and have price turn around and take you out for a loss. So never let a winning position turn into a losing one. As you can see, the doji strategy, breakout strategy, can get you in at trends at a favorable price point. Just bear in mind there'll be instances where there'll be trends like this where a doji candle would not appear. Okay, but that doesn't mean that you do not have to trade. Okay, so for example, if there was no doji candle, this is still a resistance level. Okay, so you could have traded the breakout there. Just as if this doji candle didn't appear, you could have had this as resistance and traded this breakout. That resistance then became support, which shows it was a good place of entry. This is if there were no dojis there to trade the breakout with. Furthermore, if you wanted to avoid a fake out and wait for confirmation, you can have the breakout, let the price pull back and test the support, and then just enter on the breakout of the breakout. Okay, there's one for you. The breakout of the breakout strategy. How about that? Okay, you can see from these big bars that plenty of traders are jumping in on this trend. Some too late around here. Okay, but we can get in early when we know how to time our entry. We don't need no magical indicators to do this. You don't need no fancy squiggly lines on your chart. Just basic price action, trend lines, and support and resistance, along with nice candlestick patterns. Okay, and of course good money management. As I said, this is a 1 hour chart. You can use this strategy on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc. And any chart time frame. It's just that if you're using the 5 minute, even the 1 minute, the 50 minute, whatever chart, I find that the lower chart time frames do give more unreliable signals. I personally prefer the higher chart time frames, such as the 1 hour, 4 hour, daily, weekly, and monthly, simply because they have more price action accounted for, and thus I find the signals tend to be more reliable, and that applies to candlestick patterns, technical indicators, price action analysis, support and resistance, etc. Okay, so that's in an uptrend, a doji breakout. Let's look for a nice downtrend. So there's a downtrend here. Okay, how do we know this was a downtrend? Well, we had our resistance level here. We had our support level probably around here. A nice wedge pattern forming there. This is a triple top or double top candlestick formation where the resistance is tested 2, arguably 3 times. Okay, fantastic if you want to sell based on a breakout of that doji. You would have timed your entry perfectly, but we don't always do that. See, for example, there, if you tried to sell on the breakout, well, your trade wouldn't have been triggered there or there, to be fair, but point being, we trade in the direction of the trend. So we have our trend breakout. Okay, slight pullback here, so potential entry on the breakout of that doji, either there if you're using a candle body, or you can use the wicks and trade the breakout here. That wick of the doji actually was a good support level. You can see it's tested once, twice, and then the breakout, we have this big bearish bar. So a lot of traders were watching this particular setup. You got a spinning top candlestick pattern as well, 3 black crows, all bearish signals. Got a hammer pattern, bearish one. So all the signs were there for downwards continuation. If you didn't want to risk getting in after all this red had already occurred, which is fair enough, you could have waited for another pullback. This doji, I would say, would be a push just because we've had all of these red bars. I'd want to wait for a pullback, and then we have another one. There, we can trade the breakout of this doji. Again, market direction is downward, so we're going to take sell trades. Going to wait for a doji and then trade on a breakout down of the low of the doji candle. Simple as that. Okay, but don't want to get too late to a trend. When you see this consolidation around this area, it's a sign that the trend is slowing down. We don't want to sell low, get caught in a bear trap. Bear trap basically being when traders get excited seeing a downtrend, and they want to get in on the action, but they get in around here too late. Okay, and then price shoots up to the opposite direction. You can see this downwards trend line then becomes support to the upside. Yeah, and then you wait for the next trend, whether that's up or down, to take your doji breakouts. Again, same principles. I said you don't need to have a doji to justify your trades. Okay, you can trade just based on support and resistance anyway. Sometimes the doji will be the support and resistance, like this instance. To be fair to this particular setup here, I'd say there's a slight uptrend there. arguably you could have traded these doji breakouts there and there, and I mean you would have been happy if you traded that one. You could have exited when you've seen all this consolidation around here, but yeah, the market was making higher lows, and again this doji level here, the breakout of that doji was actually resistance back here, so it's just added confirmation. Okay, stop loss below the low there, or the low there if you took this one, so really tight stop losses. For this trade, stop loss above the high, this one above the high as well, again tight stop losses, trailing your stop loss on the way down and getting as much profit as you can, perhaps closing part of the position on the way. Okay, so as I said, no fancy unicorn indicators on this chart, just pure price action and good money management. Doesn't get any better than that. Okay, well, hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe for more.